e.l.f. Beauty. Today we're going to be talking about e.l.f. Beauty, the company, the beauty and cosmetic company. But before we get into that, please, if you enjoy our content, go leave a like, go subs, leave us a comment, let us know any other stocks that you want to hear about, and we'll make sure to cover them. So look at e.l.f. Beauty, guys, down 3.5% just today. Let's go through some of their stuff. So year to date, down 30%. Man, they're getting smacked for such a great company that's stealing market share in the beauty and cosmetic space. What the hell is happening with them? All right, let's see. What's the 1 year is also down 29%, and 5 years up 78%. But man, has it been a rough time period since, well, when it peaked up here in $217 a share back in 2024. So, man, it's been a tough 2 years, but we're going to go over why this is happening with the company and some of their numbers. And I'm going to go through and show you where I expect the company to go. All right. So, first off, here's some news that just came out about the company. e.l.f. Beauty faces governance review as valuation and risks diverge. So this is something that is hindering the stock. It's minor news. It's only an investigation right now, but Halpers said that LLC is investigating e.l.f. Beauty for potential breaches of fiduciary duty by the company's officers and directors. Now, I searched this up in case you don't know, but fiduciary duty is a strict legal or ethical obligation for one party to act in the best interest of another party. So, oh man, I don't know what this is, going to entail for the company. Hopefully, it's something minor. Hopefully, they don't find anything, but this is just something that, is a nuisance for them right now and an obstacle, but I still believe they're going to make it to the other side as any other great company would do. And man, e.l.f. is a great company, so I really hope that they can get over this. So we're going to go through some of the numbers, but first, this is the site right now. For anyone who doesn't know that we have developed, it's for Gamma, so be sure to check it out. We have it linked in our description. Right now, it's free, so go sign up, go use it. This is the homepage for it. I got my stocks on here, but let's go to the projections. All right, so I already got it loaded up here. So this is my bull case for 4L. All right, so in 2027 and on, I have them doing about 25% revenue growth in 27 and going down to 20% for 28 and 29. I also have them doing about 30% net income growth for those 3 years. And I also have them trading at about a 35 to 40 multiple. That's a fair P for the company in this space. And that puts you right around $244 on the low end and $278 on the high end with a midpoint of 261, which is an overall CAGR of around 48%. Now, over the next 3 years, I would love to have my money hit 48% a year. I mean, that's phenomenal, right? Almost 50% of your money every single year for the next 4 years. That's amazing. So let's take a visual look at this real quick. Right here, the stock is down to $54 today. That's crazy. But it goes up to 261 by 2029, implies a 48% mid CAGR with a high and low of 45 and 50%. Now that's phenomenal for the company. Let's go to my base case. So base case is just another way of saying what I expect to happen. Bull is more, okay, this is if every single thing that I expect to happen somehow does, and it's, they're performing more than they should, like phenomenally for the company. And then bear case is like, what we, if everything kind of goes bad, this is what we expect. All right, so for my base case, I have them only doing 23% revenue growth in 27, and then I have them going down to 15% in 28 and 29. Now, that's pretty doable for the company. I mean, also consider how they just acquired Haley Bieber's company, Rode, not too long ago. So their top line is definitely going to be getting affected in a good way from that in the coming years because they haven't been able to fully execute and roll out with that opportunity yet. Not to mention their cost and pricing controls that they have with such a cheap product line that they have. They have the ability to raise just $1, which anyone can afford, kind of to offset tariffs and the inflation that we're seeing right now. So that's also a plus for them. And everyone you know, I'm sure you've talked to your mom, your girlfriend if you got one, and girlfriends if you know at school or wherever, and ask them what they use. I'm sure they have some sort of e.l.f. beauty product. I mean, everyone does. So they used to be a small dog in the sector. However, I would say they're stealing market growth, and they will eventually become a top dog. I mean, that's just everyone uses them. If they continue to execute, they're gonna eventually hit there. All right, so back to this. I also have them doing about 20% net income growth over those 3 years. I think that's more realistic, but I still think 30% is doable, in my opinion. And we just come down a little bit on the P's, have them trading at 30 to 35 multiple. And still, that puts you at a 178 midpoint. That's still crazy. I mean, that's still an average 34% CAGR in the midpoint, with a 32% on the high or on the low and 37% on the high. So if this is more of the realistic possibility of happening, I would still want my money here. And I still believe that they're going to go higher than 178. This is like a very conservative base case, to be honest. This is almost like a bear case, in my opinion. This is like in between a bear and a base case. So I think they'll still do higher than this. But even if they were just to hit this, 35% mid CAGR, I mean, compare that to what? The S&P and index, some sort of ETF, Mr. Safe option. I mean, what? You're making 8 to 12%. That's still, you want your money doing 35% a year, or do you want your money doing 10% a year? I mean, it's the safer option, but I mean, come on. Take the 35%. Don't be too greedy. But this is very safe. I mean, this company's going to hit these numbers. And by the way, if you go sign up for this tool, play around with it, experiment, go to a company's balance sheet, like up here, go to their balance sheet, go to their income statement, go to their cash flow, go onto their investor relations page, do some research yourself to get these numbers. It's not too hard to find where you believe that, like the numbers that you're going to use. Also listen to their conference calls because that significantly helps give you an edge on where you believe they're going to go, and read their guidance. That's going to also tell you, hey, we're guiding to hit this by this year. So go on there, and that's going to be how you get these numbers. And yeah, so pretty much I would say e.l.f. right now is a huge opportunity. I mean, it's not the best opportunity you can get, but for 35% CAGR average, man, I'm taking that any day. So if you just want like a safe stock that's a beast of a company that's been beaten down because of external pressures, as you saw up here, like maybe investigations and some tariff hits because of, people not understanding the pricing controls and how much tariffs really affect them, because their CEO has actually talked about that back in 2018 when that was a more prevalent issue, saying, this is how we plan on tackling tariffs. And I don't think many people really understood what their counter was to it. And I would say they're positioned very well, even despite all of these obstacles going on. So, also, if you want to take a look here, this right here is just a few more things from analysts. These are the price targets and the analyst ratings. About two people said strong buy, 12 said to buy, 12 also said to hold, and only about three people said to sell. Now, an average consensus right now amongst different analysts have the stock going to about a $95 price target per share. And now that still implies a, you can call it like 70 to 80%, which is still, regardless, a very good asset to be holding. So analysts are bullish on it. The numbers that I've run are very bullish on it. I would say e.l.f. is a huge opportunity right now. It's definitely been misunderstood, but I still like this, and I think if you diversify your portfolio well, I think this would be a very useful asset to have just a few shares of in the portfolio. It's going to be, buy it, sleep great at night type of stock, not have to worry, not have to, oh man, my stock is going to do bad tomorrow. I think I'm going to lose sleep because Elf is having this problem, this problem, this problem. Oh, like no, you're not going to lose money on this. It can't go much lower than 50. And anything under 50, just scoop up shares of that because at that point, it is a huge buying opportunity. If you see Elf in the 40s, even the 30s, with this much market cap, with the numbers that they're putting up and the team they have and the acquisitions, oh my God, buy every single share in sight. I mean, just buy every single share. That would be crazy. So definitely I would rate this a buy. I already own a lot of e.l.f., so I'll continue to scoop up more shares as this continues to bottom. So we'll see where this stock ends up. Who cares? It's at $53 right now. Okay, I personally like to focus on long term. So if I see the stock is down 4%, I'm not worried at all. I like when it's down. It means I get to add more positions, add more stock to the position. So yeah, I would say go ahead and check that out. Run your own numbers if you don't think so, but that's just what I gotta say. So I appreciate you guys watching. Once again, follow us, sub to us, leave a comment if you want, and go on here, go sign up right now for for our website right now. It's free, gets you everything you need to know about how to run your own analysis, projections, run your own numbers. Easy to use. We have tutorials on here. We have right now it's the beta version, so we only have a set amount of tools you can use, but go play around with it and see what you like about it and learn a little bit about certain stocks. I mean, it'll help you out tremendously in your investing journey, and we're only improving it and adding to it. So, yeah, hope to hear from you guys and let us know what you guys think of the tools. So, thank you, and I'll catch you guys all in the next one.